Sir, financial markets. I would like to give a few of the major steps and initiatives being taken by the government for the financial markets. Last year in my budget speech, sir, I had mentioned about deepening the bond markets. To achieve the aspirational growth rate, we would require flow of capital in our financial system. A lot of work has been done on this in consultation with the RBI. Honourable Speaker, sir, I am pleased to inform this House of the developments. Certain specified categories of government securities would be open fully for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit default swaps, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating a new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, sir, 2019. Liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated. Infrastructure financing. Government's commitment for investment in infrastructure was reiterated when 103 lakh crore national infrastructure pipeline projects were announced. I would also like to inform that about 22,000 crores of rupees has already been provided as support for infrastructure pipeline. On December 31st, if honourable members would recall, a national pipeline consisting of more than 6,500 projects were announced. 22,000 crore has already been provided as support to infrastructure pipeline. This would cater for equity support to infrastructure finance companies such as the IIFCL and a subsidiary which is of NIIF. So two institutions, IIFCL and the subsidiary of NIIF, take it. They would leverage it as permissible to create financing pipeline of more than 1 lakh crores. This would create a major source of long-term debt financing for infrastructure projects and fulfill a long-awaited requirement. So, the IFSC, GIFT City, has the potential to become a center of international finance as well as a center for high-end data processing. GIFT IFSC has an approved free trade zone for housing vaults. It already has 19 insurance entities, 40 banking entities. It has also provided for setting up of precious metals, testing laboratories for them, and refining facilities also. With the approval of the regulator, GIFT City would now set up an international bullion exchange in GIFT City IFSC as an additional option for trade by global market participants. This will enable India to enhance its position worldwide, create jobs in India, and will lead to better price discovery of gold. Sir, in the recent years, there has been a surge in trading volumes of Indian rupee in the offshore financial centers. The government and the RBI has taken various measures to permit rupee derivatives to be traded in the International Financial Services Center at GIFT City, Gujarat. So just a very quick word on disinvestment. Listing of companies on stock exchanges brings discipline, and it disciplines the company and provides access to financial markets and unlocks its value. It also gives opportunity for retail investors to participate in the wealth so created. The government now proposes to sell a part of its holding in the LIC by way of initial public offer. Initial public offer. Sir, fiscal management. The 15th Finance Commission. The 15th Finance Commission has given its first report pertaining to financial year 2020-2021. In the spirit of cooperative federalism, I am pleased to announce that we have in substantial measure accepted the recommendations of the Commission. The Commission would submit its final report to the President during the latter part of the year for 5 years beginning 2021-22. It is decided to transfer to the GST Compensation Fund balances due out of the collection of the years 2016-17 and 17-18 in 2 installments. Hereinafter, transfers to the fund would be limited only to the collection by way of GST compensation cess. A fundamental overhaul of centrally sponsored schemes and central sector schemes is necessary so that we can align them with emerging social and economic needs of tomorrow and to ensure that scarce public resources are spent optimally. Recently, there has been a debate over transparency and credibility of the projected fiscal numbers. Let me assure the House that the procedure adopted is compliant with the FRBM Act. This is also consistent with the practices hitherto followed. However, for greater clarity, I have enumerated those central government debt that are not part of the market borrowing and are used to fund the expenditure at the annex. I'd like to repeat this line, sir. I'd like to repeat this line, sir. For greater clarity, I have enumerated those central government debts that are not part of market borrowing and are used to fund the expenditure at the annex. Servicing of interest and repayment of these debts, as hitherto done, are done out of Consolidated Fund of India. So now I come to some numbers. Revised estimates of expenditure for the financial year 2019-20 are at a level of 26.99 lakh crores, and the receipts are estimated at 19.32 lakh crores. We have estimated nominal growth of GDP for the year 2020-21 on the basis of trends available at 10%.